Professor, let me do so. Good afternoon to you,
Ambrose, would you
ladies
like
and
to
gentlemen.
introduce and we start?
Yes, Professor. Participants, you are most welcome. Those who are joining in, you are also welcome. As we welcome others and as others join us, I want to welcome all of you in a special way for this Islamic Banking and Finance webinar. Islamic Banking and Finance, to me, is a new concept. I came to know about it around 2015. So I believe most of us may have the same experience. You might not have known it for before 2010, but I want to welcome you, all of you. My name is Ambrose Medisha Kario. I work with the Institute of Certified Public Accountants of Uganda as Head of Education and Training, where the CPDs fall. For this webinar, we will have updates on the concepts of Islamic banking, the meaning of Sharia, opportunities with the Islamic banking and finance, and risks and mitigating measures around those concepts. We have a very expertise presenter who will give us more guidelines on Islamic banking and finance. For this case, allow me introduce the moderator for our webinar. And maybe before I introduce the moderator for our webinar, the concept of Islamic banking and finance was also introduced in our syllabus for CPA students at a certain level in the advanced financial management and financial management. Those papers, if you have graduated from CPA, then you should also have been exposed somehow on Islamic financing. So allow me introduce our moderator. Our moderator, ladies and gentlemen, is CPA Simeon, Professor CPA Simeon Wanyama. Professor is a university professor, as well as a practicing accountant with Simpson and Associates. Professor was a former, or is a former counsel of the Institute of Certified Public Accountants of Uganda. Ladies and gentlemen, let's put our hands together wherever we are virtually and welcome the moderator for this session. Professor, you are welcome and you may take on the microphone. Thank you, Professor.
Thank you, Ambrose. I'm delighted to be moderating this session. And Islamic banking is a concept that I've been following for some time. In fact, the first time I heard of it was in 2003 when I was doing my PhD. And we had some colleagues from Saudi Arabia who were carrying out research in Islamic banking. And there used to be a lot of discussion on it. And then also the Act, the Financial Institutions Act, Amendment Act of 2016, where I think Dr. Lujja was involved. So it is an interesting topic, and I'm happy that the person who is going to present it was also involved in drafting the bill, which brought about that law. Is the CV, the brief one, is also quite rich, and I would like to share it with you on the screen if you can see it. Um, let's see if it comes up. Yeah. I don't know if you can read it, but Dr. Sulaiman Lujja is a banker and Sharia auditor who has practiced Islamic banking, finance, accounting, auditing, and Sharia governance for over 10 years. He conducted an expert review of Islamic banking and Sharia governance component of the Financial Institutions Amendment Bill number 16 of 2015, which he presented to the Parliamentary Finance Committee and adopted by the Parliament through the Financial Institutions Amendment Act of 2016. He is a certified Sharia advisor and auditor with accounting and auditing organization for Islamic financial institutions based in Bahrain. He has a PhD in Islamic banking and finance from Malaysia, an MBA with Islamic banking and finance specialization from Malaysia, a bachelor's degree in Sharia from Saudi Arabia, and another bachelor's degree in accounting from Uganda. He is currently working as the head of Islamic Banking Department at Tropical Bank Limited. He is the founder and chairman of the One Islamic Finance Center, Uganda. He is the chairman of the Association of Islamic Finance Professionals in Uganda. He is a lecturer of Islamic Banking and Finance at Islamic University in Uganda. Previously, he worked as an accountant for Medina International Development Agency in Saudi Arabia. He is keen to promote and manage strategies of ensuring effective establishment and implementation of Islamic finance and Sharia governance in emerging markets. I'm sure there are lots of other things which are not mentioned here. So if Dr. Sulaiman would like to add anything, you feel free to add whatever you wish, that we can get to know you better. But we are happy to have you, and would like to invite you to make your presentation, which is up to 1 hour. It doesn't have to be an hour, it can be far less, but the floor is yours. You are most welcome.
Yes. Alhamdulillah. Wassalatu wassalamu ala rasulillah wa ala alihi wa sahbihi ajma'in. I praised God who has given us life up to today. And I would like to share with you, I don't know, I should have my presentation up. It was up. Okay. So I wanted to share with you about Islamic finance, Islamic banking and finance, opportunities and risks. Now, this is the presentation outline. Briefly, I'm going to talk about meaning of Islamic banking and finance. What does it mean? Because it is still ambiguous to some quarters. They don't understand what this banking system is. Because it is based on Sharia principles, I'm going also to talk about the meaning of Sharia. What does Sharia mean? Then opportunities in Islamic banking and finance. Who are the beneficiaries from Islamic banking? Is it confined to only a segment of people and leaving out others? Then we look at the risks in Islamic banking and finance and how to mitigate these risks. Then we shall conclude the presentation. Now, Islamic banking and finance, despite its naming, you hear the name, the word is Islamic banking. Despite that name, Islamic banking and finance is not a religious product or system. It is rather banking, insurance, capital markets, microfinance, and other financing products or systems that are developed to meet the requirements of people in a way that does not contradict Islam or Sharia principles. You see, because there is an argument, should it be called Islamic banking or Islamic finance or Islamic banking and finance? Because when you say finance, finance is the mother of banking, accounting, and other fields. And also economics is the grandmother, something like that. So when you say finance, already you mean banking. But the naming should be like that because where it came from, that is how they refer to it. They call it Islamic banking and finance. But I can comfortably just say that the naming should not worry us. We should go by how it is called, Islamic banking and Islamic finance. Although Islamic finance already encompasses banking. Because even on my degree, when I was studying, that is how they call it. For example, a PhD in Islamic banking and finance, MBA specialization in Islamic banking and finance. But when they say finance, we also mean something which is beyond, which is more than just banking, like insurance. You know, Islamic banking cannot work in isolation. It works in a system where there is also a developed Islamic insurance, what they call takaful, Islamic capital market, Islamic microfinance, and others. For example, Islamic money markets, because you cannot work alone as a bank. You have to have a market where you meet other players. Now, because we have said that this system is based on Sharia principles, this brings in the question: to what extent do we engage Sharia? Because some people are scared, they are not comfortable with Sharia. They think Sharia is too big. Sharia is too complicated to bring to Uganda to adopt in the Ugandan legal framework. Now we are saying here that while Sharia is a legal framework within which all affairs of a Muslim's life are governed, Islamic banking and finance applies only a limited part of Sharia, which relates to commercial transactions and not other aspects of our life. So people should not be scared that we are going to implement a fully fledged Sharia system in Uganda, because even elsewhere in the world where it has worked, they are only implementing Islamic banking, they are only implementing Sharia principles only to the extent of the financial services sector or commerce, business, and economics. So Sharia, if you look at Sharia here, I tried to define Sharia. What is Sharia? Sharia is too big. Sharia is too broad. Sharia involves ibadat, what we call acts of worship. Muslims worship. For example, they go to Mecca, they worship every day, they pray 5 times a day, they fast the month of Ramadan. You see, I am crossing it out. What do I mean? Sharia, the Sharia, which is relevant to Islamic banking, does not concern anything to do with ibadat or acts of worship of Muslims. What we are interested in here in Islamic banking is what is in green, mu'amalat. Mu'amalat, when we say mu'amalat, we mean Islamic commercial transactions. Islamic commercial transactions, buying, selling, trading, lending, borrowing, something like it. Only Islamic financial transactions. But other acts of worship, like praying, worshiping, covering, for example, punishments. People, when you speak about Sharia, people think of punishments, cutting off arm. All those aspects are irrelevant in Islamic banking. Sharia does not completely reject. When we talk of Sharia, some people can think that it is going to reject everything to do with the conventional framework, the conventional finance framework. Sharia does not completely reject all principles of conventional financing. There are common grounds. A lot of them, we have a lot in common. Sharia agrees with conventional finance in a lot of aspects, because Sharia did not come to conflict what ethics calls for. Sharia did not come, or Islam did not come to reject, to put an end to the day-to-day practices of people. That's why you see that the Prophet Muhammad, when he came, because Islamic banking is drawn from the acts of Prophet Muhammad, when he came, there are certain contracts he allowed to be practiced, like salam, the contract of salam. It is acceptable. It is well known. It is well known. It was well known in Jahiliyyah. Jahiliyyah is pre-Islamic Arabia. It is well known. People were practicing salam. What the Prophet did was only to modify the practice of salam, and that should be the norm. And this is what we tell Sharia scholars. Sharia scholars who are going to advise banks, don't come with the mentality of dismantling the system. You cannot afford. The Prophet, peace be upon him, found the pre-Islamic Arabia, people in the pre-Islamic Arabia practicing salam. Salam is forward sale. He found them practicing salam. He just modified it. So what we do is just to bring ethics into banking, ethics into business. That ethics is common ground. It is acceptable by all religions. Here I quoted for you, for example, Islamic banking and finance prohibitions. We adopt, in Islamic banking, we adopt accounting principles. We adopt financing principles. We adopt economic principles to the extent that they don't conflict with Sharia, they don't conflict with ethics. For example, aspects here, number 1, number 2, number 3, and number 4, they conflict. Interest is prohibited by Sharia, by Islam. And by the way, these aspects which we prohibit in Islamic banking, they are also prohibited in all divine arrangements. For example, Christianity, I cited for you here some verses from Bible. The Bible does not allow the act of devouring interest. If you go and read Leviticus, that is chapter 25, verse 35 to 38, it does not allow interest. Exodus, the citation is there, Deuteronomy, and Ezekiel. All divine arrangements do not allow the act of devouring interest. You can go and read them. These slides are going to be shared. But maybe if I can just recite for you the Leviticus, Exodus 25, 27, what does it say? If you lend money to one of my people among you who is needy, do not treat it like a business deal, charge no interest. So all divine arrangements disagree with the act of charging interest. The same to speculation. The same to excessive uncertainty or ambiguity, and dealing in sinful activities. So Islamic banking came to see that there is ethics into business. You know, the problem in banking came in Europe. You know, banking started in Europe. It came when when the church lost influence on banking and other business sectors. Earlier, before, banking and also other business sectors were guided by church. But when they lost influence on banking, that is when spiritualization came into play. Spiritualization means the detachment of religion from faith. All religious arrangement, all divine arrangement, I mean arrangements, all arrangement religions which came from God, they prohibit the act of devouring interest. All of them call for ethics. All of them shun sinful activities. Now, this is Pope, I quoted for you, Pope Benedict XVI. He said there is a famous statement here he made after the financial crisis 2008. He said the ethical principles on which Islamic finance, Islamic banking, I told you Islamic finance, he means banking, insurance, capital market, microfinance, pension schemes, and all collective investment schemes, and all others. So he says the ethical principles on which Islamic finance is based may bring banks closer to their clients and to the true spirit which should mark every financial service. Now, after that comment from Pope, people saw outside the Wall Street, they saw posters outside the Wall Street, people asking for Islamic banking system. They said, please, if conventional banking does not provide solutions to our economic problems, let's bank the Muslim way. Please, let's bank the Muslim way. So this is the call we are bringing to Uganda. We are saying, please, if conventional banking is still having gaps, there are still issues which are pending, which conventional finance cannot solve, cannot render solutions. Islamic finance, Islamic banking can be adopted. Big countries, famous countries have adopted this system of banking. In Europe, many countries have adopted it, like UK, US, US, Denmark, Luxembourg, Russia, Australia, Canada, and others, they have adopted this system of banking, the Islamic banking system, because of the solutions. You look at the solution, where the solution is coming from, you just adopt the solution and come out of the problem. So this is what Europe did. And after that landmark statement from Pope, you saw Europe going out to adopt Islamic banking system. Most of the banks, they adopted Islamic banking system by either opening windows or subsidiaries of Islamic banking or Islamic Sharia banking system. Now, this is a famous quotation. We have gone to the opportunities in Islamic banking and finance. Now, why Islamic banking? Why most countries in Europe adopted this banking system? Because Islamic banking makes sense to investors, irrespective of the religion, irrespective of where it is coming from. It makes sense to investors. You look at this famous quotation. It was said by the former governor of Bank of England, Sir Eddie John, in 1995. When I looked at it, when I looked into it a bit more, it seemed to me that, in fact, many of the financial products commonly used in this country already had some, at least, of the characteristics consistent with the teachings of the Quran. So there is no harm. We can use solutions from the Quran. This is what he says. The governor of the central bank of England, if only, this is the condition, if only we understanding of the Islamic financial products being talked about at that time. Indeed, this is what he said. Indeed, it seems to me also that as a matter of general principle, a wide range of financial products would benefit the whole of our community, and that Islamic products could prove to be attractive beyond the purely Muslim sects. The purely Muslim sects. So this is the call we are bringing to Uganda. Please, Islamic banking, the solutions we are bringing in Islamic banking, they are going to go beyond purely the Muslim sects. It's not going to benefit only the Muslims. We're going to look at the beneficiaries here. Now, opportunities for Uganda, where Uganda, okay, let me first talk about the beneficiaries here. Financial products consumer, they're going to benefit from Islamic banking through greater supply of risk-based capital. People here, they are yearning to adopt financial products which will bring solutions to them. Then the economy, the Ugandan economy, through real economic activities. You know, Islamic banking is practical. It's bringing on board real economic activities. That is what we call trade, industry, commerce, and agriculture. You know, we are going to deal with commodities. We are going to deal with trading, real economic activities, buy and sell, not just dealing in money, speculation, and the act of charging interest, which is prohibited by all religious denominations or by all divine arrangements. Now, another beneficiary would be the financial institutions. They're also going to benefit through product diversification and large pool of resources, because this is an innovation which has come to banking. And this is what we say, that banks are going to adopt this in Uganda. And here you call upon the financial institutions, all the financial institutions, the players in Uganda, the 25 commercial banks, to come on board and adopt Islamic banking, either Islamic banking window or Islamic banking subsidiaries in Uganda. Some of them are large enough to adopt subsidiaries. So this is product diversification. The normal thing you have been doing, maybe if it is not providing solutions, you know, banking is about innovation. Look at the market, what do they want, and adopt that. If the trend now has gone Islamic, it is okay. You can adopt Islamic banking products to a level of either a subsidiary or a window. Then lastly, government is also going to benefit from Islamic banking. Government benefits from Islamic banking in terms of sukuk. Sukuk, we mean here sovereign Islamic bonds. Sovereign Islamic bonds, you know, we have a number of government projects. Where government does not have funding, or it is lacking enough funding. So it is keeping on hold these projects which would be of benefit to the entire community. So we are saying through Islamic finance, we have solutions like Sukuk. You look at Malaysia, in early 80s, Malaysia and Uganda were at the same level, but today, where is Malaysia, where is Uganda? One of the solutions, in fact, which brought on board the Eastern Tigers, they are called, those countries are called Eastern Tigers. Among them is Malaysia and also Singapore and others. Eastern Tigers, among the factors which brought them on the front page was the adoption of Islamic finance. The issuance of sovereign sukuks, here, it gives room to government to issue Islamic bonds through Sharia compliant financing. Now, opportunities have gone back to the earlier slides. Opportunities to Uganda or for Uganda. What are the opportunities which are awaiting Uganda? Why should Uganda fast track the implementation? We know that we adopted Islamic banking, we adopted Islamic finance already, and we have our legal framework already, already accepting or accommodating Islamic finance. The Financial Institutions Amendment Act 2016, it brought on board, number 1, Islamic banking, number 2, agent banking, number 3, bank assurance, number 4, reforms in deposit protection, and others. So Islamic banking was number 1. So the legal framework, in terms of legal framework, at least we are okay. We have the Financial Institutions Islamic Banking Regulations, which was gazetted. So it is awaiting. After that, banks started applying for licenses. Number 3, Tier 4 Microfinance Institutions and Money Lenders Act 2016. You see Microfinance Support Center, they are already dishing out Islamic financing, Islamic microfinance, or Islamic banking products. They have them, Islamic microfinance products. Then the last one, we have also the Insurance Act. It brought on board the insurance or takafur, Islamic insurance. It brought on board takafur, Islamic insurance. So Uganda, opportunities, a lot of opportunities, many opportunities are awaiting us after bringing on board these laws. So we are also an OIC member country. Uganda is Organization of Islamic Countries. A member is a member there. Uganda has a relatively comprehensive Islamic banking and Sharia governance legal framework. I've talked about the laws, the list of the laws we have in place. Now, what is awaiting, what is remaining, what is pending is just implementation, which is just very easy if you have the legal framework. Kenya started from scratch. It didn't have any law. Tanzania, the same. Rwanda, the same. But Uganda, we have all the beautiful laws to bring on board Islamic banking, Islamic insurance, Islamic capital market, Islamic, but we have not yet kicked off. Maybe after this webinar, maybe we can have solutions to this, and we have Islamic banking kicked off, or licensing of Islamic banking kicked off. Then number 3, IDB, or Islamic Development Bank, has set up a regional office in Uganda already. All these factors render an opportunity for Uganda to become a regional Islamic finance hub. Now, risks in Islamic banking and finance. What are the major risks in Islamic banking and finance? The major risks, as you know, Islamic banking is not free of risks, just like conventional finance. Risk, like the term in conventional, it means the same in Islamic. Risk means also in Islamic banking, it means the probability of occurrence of unfavorable outcome or event. Risks are inherent in Islamic and conventional products. Conventional, just like conventional products have risks inherent in them, Islamic products also do have the same risk, similar risks, and much more risks than conventional. Islamic banks maintain a Sharia risk management control function. The spelling area, you would excuse me, there is a U, which is missing. So Islamic banks will maintain, or they are maintaining, where they are operational, they maintain a Sharia risk management control function as part of their integrated risk management framework. You know, the bank-wide risk framework, this one is known. Every bank has a risk department. For Islamic banks, in order to cater for risks, the same, because we share. We have similar risks, and we are going to look at them. We have the same risks, and we have more than the risks conventional banking have. The conventional banking has. So, the idea of setting up this Sharia risk management control function is going to sit, or it will be at minimum, it can be an officer or a desk in the bank sitting in the risk department. The work of that risk together with the entire staff of the integrated risk management or the bank-wide risk management, which is maintained in the bank. The work of it is to understand, to measure, to control risks within their capacity to readily withstand adverse outcomes. So especially here, we're going to look at the unique risks of Islamic banking system or the Islamic finance. We are going to maintain this Sharia risk management control function. At minimum, it will have an officer in a bank. The work of that officer will be to understand or to identify, to measure, to control risks, to ensure that the risk, here we mean the unique risks for Islamic banking, the unique risks like Sharia non-compliance, that we can withstand the adverse outcomes of non-Sharia compliance. Because the risk with non-compliance with Sharia is too huge, to the extent that when Sharia scholars come and find you non-compliant with Sharia, they render the entire income, they render the entire income impermissible or haram. And the implication in this, the Sharia scholars will direct you to channel that income, which is tainted, to channel it to charity. And that will be a great risk for Islamic banks. Now, here are the generic and unique risks in Islamic banking. As I said, generic down here, you can see generic down here. Generic, we have the credit risk. Credit risk is the same. This is generic. It is found in Islamic and also in conventional. The same credit, the same way we are affected by credit risks. The credit risk is the potential that a counterparty fails to meet its obligation in accordance with the agreed terms and conditions of the credit-related contract. That is the word you have. The same. If I give out money, for example, 1 million in Islamic, I fear the risk that my counterparty or my customer will not be able to pay, or he will be able and he will intentionally refuse to pay. So the same way you mitigate the credit risk in conventional, it's the same way you mitigate it in Islamic. Now, the second one, which is generic, is also the market risk. Market risk is the potential impact of adverse price movements such as benchmark rates, foreign exchange rates, equity prices on the economic value of an asset. Because we are dealing in the asset much more than conventional. So we are scared that maybe we can buy an asset in Malaysia, a platform in Malaysia. There is much to develop as Uganda. This is what we say. Uganda, there is much to develop. We still have to develop, for example, the commodity platforms where banks will go and buy commodities, because we're going to be dealing in commodities, buying and selling. We are not exchanging money like in conventional. So we have to build these markets. So I fear the risk that there will be adverse price movements or fluctuations in the foreign exchange. The same way you mitigate it in conventional is the same way you are required to mitigate it in Islamic here. Another one is liquidity risk. The same way it is in conventional, the potential loss arising from the bank's inability either to meet its obligation or to fund increases in assets as they fall due without incurring unacceptable costs or losses. So the same way you mitigate it in conventional, the same way you mitigate it in Islamic. Operational risks, the same. The potential loss resulting from inadequate or failed internal processes, people, system, and external events. The same way I am scared that maybe I will recruit people who don't have expertise, the same way you are fearing. The same way you are fearing it in conventional, the same way I fear it in conventional. Now, the unique risks, these are unique to only Islamic finance or Islamic banking. Because of time, I will talk about only two. Number one is dispersed commercial risks. the equity investment risks, because I'm talking to scholars, I'm talking to practitioners, I'm talking to professionals. You can go and read it. The major one I will talk about is Sharia non-compliance risk. The risk that we promise people that we are going to be compliant with Sharia, but we end up not being compliant with Sharia. That is a great risk in Islamic banking. And central bank as a regulator, or the government of Uganda, which introduced Islamic banking, has to ensure that really Islamic banking is compliant with Sharia. We are going to look at how we mitigate it. Then the dispersed commercial risk. The dispersed commercial risk, IFSB, or Islamic Financial Services Board, they define this dispersed commercial risk as risk arising from assets managed by Islamic financial institutions on behalf of the investment account holders, people who come and deposit their money with us, and we act as the investors for their deposits, which is effectively transferred to the Islamic financial institution's own capital, because the Islamic financial institution follows the practice of foregoing part or all of its Modarib share of profit on such fund. So because we are scared, conventional finance, conventional banks are giving out, for example, interest rate, for example, 10% at FDs, fixed deposits. Islamic banks will have a unique risks that for us, when we are giving out our return, our profit to our customers, we are not matching. Maybe we are below under the conventional rates. So as a mitigation, what Islamic banks do is just to do what? Is just to put on side, to forego part of their income. There would be their income. They give it to the investment account holders in order to match the conventional rates. Now, another mitigant here, which we have two issues banks are going to be very keen. This is where Malaysia started from, and other countries started from this point. These two what we call profit smoothing techniques. There are two, the profit smoothing techniques. Number one, profit equalization reserve, the PAR, the profit equalization reserve, and number two is the investment risk reserve. I don't think we have time. We have time to explain these two, but precisely when you can see the line up here, sources of funds, an Islamic bank, a typical Islamic bank, it gets its fund from shareholders and also the investors. The investors here, we mean the depositors. People come and deposit their money using different accounts. Some of them, they use, for example, Mudaraba, general investment accounts. Others use fixed deposit account. Others use savings account, the CASA's saving account and current account. That is one source of fund. Then another source is the shareholders fund. These funds together, they are pooled. They are pooled into a basket to form an asset or to give out financing. You can see asset here, second line. This is the fund allocation or the use of funds. We give financing, the Islamic financing, we lend out that money. When we lend out that money, we get profit. Now, before we allocate that profit to the shareholders and also the investment account holders, a part or a portion of that profit is put aside in a suspense account. That account is called profit equalization reserve. Profit equalization reserve, to ensure that in case that the profits are less, in a period where profits are less and we are going to suffer, like what we said in the earlier slide, the dispersed commercial risk here, which is a unique risk, we can mitigate that risk by compensating or by matching the conventional rates. We get a portion from the profit equalization reserve, and we match the conventional rates. That is number one. Then number two, after allocation here, after putting aside a portion in a suspense account, which is called profit equalization reserve, the remaining profit is allocated to the shareholders, and another one, before it is allocated to the investment account holders, I want you to get me right here. the profit equalization reserve is put aside at a point when distribution is done between the shareholders and the investment account holders. That is the point. Now, investment risk reserve is put aside at a level when we have already allocated the profit for the shareholders. Now, the remaining to the investment account holders, before we can share between because also they have tiers, we call it tiers or tiers. I don't know, it depends on where you went. They have tiers. Some of them, they have invested for 2 months. Others have invested, are fixed for 1 year. Others are savings. Others are current. Others are investment. So they don't have to share equally. So before we can share, we can cater for the allocation between amongst the investment account holders. We allocate, we put aside some part of that profit as investment risk reserve, as a reserve. Now, another risk mitigating measure is the 3 lines of defense, like in conventional. The 3 lines of defense. The first one is the first line of defense, like in conventional. We have the first line of defense. This is a risk mitigating measure to both Islamic and conventional, but here I've incorporated in the unique mitigating measures for Islamic, uniquely for Islamic. The first one, the first line of defense, this is the touch points, people who interface, or officers in the bank who interface with the customers. That is our first line of defense. You get the point? So we are mitigating, we can mitigate risks with them. We ensure that they handle very properly our customers. Like in convention, the same. Then business units, corporate department, wholesale department, or it depends on how you name it, retail departments. Islamic banking is also here. It is also the first line of defense. Then the business support, like the IT, because IT is very crucial. It is very crucial to ensure that we are compliant with Sharia. For example, once the computations of profit are tampered with, it will render our income non-permissible, and we shall be directed by Sharia scholars to channel that income to charity. So our support unit has to be firmly developed. Then operations department, the same, and also the product development. Product development in conventional and Islamic is our first line of defense. Product development, because once you fail at product development, it is enough. You have failed. You cannot catch up. So we have to ensure that we are compliant. Then the second line of defense, as you can see here, the second line of defense, we have risk management. That is the credit, for example, the credit risks, market risks, and operational risks. You see, we looked at risk management where we said that you press a Sharia risk control officer. Number 2 is Sharia review. We have to review. We have to do review. Then another one is Sharia risk management and also compliance. Compliance is called for in conventional and also Islamic. That is our second line of defense. Then there's the last one, the third line of defense. The third line of defense, we have the internal audit. This one is shared. Conventional and Islamic, we have to have internal audit department. Internal audit department. Then the last one is the Sharia audit. Sharia audit is unique for Islamic finance or Islamic banking, Islamic banks. This is a department or a unit or a desk or an officer. It depends on the magnitude of the bank, which is put by a bank, and it is established by our Islamic banking regulations. Islamic banking regulations orders the establishment of the Sharia audit function. Each and every financial institution which is desirous to implement Islamic banking or to offer Islamic banking products is required by the regulation, Islamic banking regulations, to have a Sharia audit function in place. Now, non-Sharia or Sharia non-compliance risks. What are Sharia non-compliance risks? When Sharia processes and procedures are not followed, you know, Sharia scholars, they are not redundant when they come to the bank. Some people ask questions. that why Sharia scholars? This is business. They have no business here. But remember, that business will be haram. That business will be impermissible when it is not compliant with Sharia. And when Sharia scholars come, in fact, that statement, when you bring that statement, when you bring your statements and you don't have Sharia, you did not comply with Sharia, all the income you have earned during that period will be rendered impermissible. And they will direct you to channel it to charity. Now, what is the use of that? So for me, I consider the cardinal or the key, the very important risk inherent in Islamic banking or Islamic finance is Sharia non-compliance risk. Because we have said when Sharia processes and procedures are not followed, all impermissible income is tainted. That's purified. It has to be purified by channeling it to charity. Now, the Sharia non-compliance risk mitigating measures, what are they? And this is what has been practiced, elsewhere in the world. There is no shortcut. You have to do it this way. Number one, establish or implement the central or establish the Central Sharia Advisory Council at Bank of Uganda. That is it. With a strong Central Sharia Advisory Council secretariat. This is how it is mitigated. Some people would argue that no, me, I will leave Sharia compliance to be handled at bank level or at commercial bank level. For the central bank just to look at banking as normal practice. But this will bring chaos. This will bring chaos. Why? Because each bank will have different way of interpreting Sharia, interpretation of Sharia principles. This will bring chaos. And we want harmony in the industry. We don't want to confuse the customers. In OIC, where we are a member, as I told you already, we are already a member of OIC. We are a member of OIC. There is this model of centralized, because this is where you have the centralized Sharia Advisory Council at Bank of Uganda or at central bank level. It is a model which was recommended in the OIC summit for developing the name of that summit was called Developing Islamic Finance Strategies in the OIC member countries. It was held in March 2016 in Ankara, Turkey. Uganda was represented. Uganda went there because we are members. We are very, very active member in OIC. So this is what they implemented. We can share, I will share with you that report of developing Islamic finance strategies for OIC member countries. They recommended this model. Establish the Central Sharia Advisory Council at Bank of Uganda with a strong Central Sharia Advisory Council secretariat. The work of this secretariat, I will maybe talk about it when I'm winding up, if I have time. But this secretariat, because most of the times these Sharia Advisory Council members are all the people who have experienced 20 years, 30 years, 40 years, 25 years. They have to be supported by a secretariat, a very strong secretariat. In fact, in Malaysia, they employ their Central Sharia Advisory Council in Bank Negara Malaysia, that is their central bank. They have the best Sharia guys in the industry, the best Sharia guys sitting in the secretariat, because they are going to do research, Sharia research. They're going to do the review the products, endorse the product, make minutes, do training, and what have you. Number two, Sharia Advisory Board. And we are very lucky, before I leave point number one, the law we have, our law established already that Central Sharia Advisory Council at Bank of Uganda. Maybe it has not yet been established practically, but the law establishes it. And by the way, this is why we are delaying until today. We don't have license. If I can talk about Tropical Bank, we as Tropical Bank, we are ready. We were ready since 2016 to implement Islamic banking and finance in Uganda, to bring on board Islamic banking and finance. We are ready. We have the products ready. We have the Sharia Advisory Council, which is number two, the Sharia Advisory Board. Number two, in commercial banks, we have it ready. We have everything ready. But maybe at the central bank, they have not yet established that council. That's why we don't have license until today. Otherwise, we have all the laws, we have everything ready. Number three, establish the Sharia audit function in commercial banks. Sharia audit function could be in-house. Sharia audit function could be in-house. I mean, done by auditors, internal auditors in the bank, or outsourced. Now, maybe I can bring in the benefit of Islamic banking and finance. Now, since I'm talking to accountants, Institute of Certified Public Accountants. Now, this is an area to venture as ICPAU, as CPA. I hear your names, CPA, just Sulaiman, CPA Gundi. So there is a chance here. There is an opportunity here, a benefit which is untapped. So for ICPAU, you can look at how to accommodate these offers and how to graduate also the Sharia auditor, because now the world now is going this way, and you're going to have investors coming here and putting the conditions and want the statements to be prepared in accordance with IoT. So you have to be certified Sharia auditor, a certified public accountant, something like that. Now the role of the Central Sharia Advisory Council at Bank of Uganda. What is it going to do? When we set the Central Sharia Advisory Council at Bank of Uganda, or at Central Bank, like elsewhere in the world, what does it do? Uganda adopted the centralized Sharia practice. It's not a shame. In fact, it was an achievement. We celebrate. Because if in OIC 2015, they adopted this model, this strategy as one of the strategies,
Yeah, the presenter has gone off, but he's coming back.
I don't know whether it is my computer, but I don't hear Dr. Lujja.
Hey, yes, I saw. Chair, the presenter is soon joining us. Participants, we are sorry about that. He's coming.
Ladies and gentlemen, seems we are having problems. Ambrose, is there any update?
Yes, Professor. Doctor is trying to join us.
Hello. Yeah. Good afternoon. Mhm.
big man to the chair. He has come back. Okay.
Wait.
Kind of.
Okay. Presentation. Isn't just sharing a screen? Just sharing a screen one sec. You have sharing a screen here, no? So you the presentation here. No. Yeah.
System
Sharing a screen. Doctor. Yeah, I want to share the screen, eh? Share the screen.
Okay, please share.
Select it.
Did you see it?
Mr. Chairman, the presenter is in the hall. He's trying to share the screen. In a few minutes, we should be able to see.
We were on slide what?
We were on the slide, the last slide. Yes, that one.
That one. Okay. Wonderful. You are doing wonders like your name. Hello?
Doctor, you're welcome.
Ambrose.
Sorry about that. You can continue with your presentation.
I'm sorry. Are we together now?
Yes, this is the slide where you were.
Okay. Okay. Now, we were looking at the role of Central Sharia Advisory Council at Bank of Uganda, where we said that Uganda adopted the centralized Sharia governance system, where the central bank, where the Central Sharia Advisory Council is adopted at Bank of Uganda. Central Sharia Advisory Council enforces standardization of Islamic banking and finance practices to avoid inconsistencies in Sharia rulings on Sharia matters. You see, the problem, if you don't have this centralized Sharia governance system, and when you don't have Central Sharia Advisory Council, it is highly probable that each and every Sharia advisory board in commercial banks are going to have different interpretations of Sharia rulings. Every Sharia scholar has a different interpretation, and this one will bring confusion to the market. A certain product A will be acceptable in bank A and impermissible in bank B. This one is creating confusion, and it is not good for business environment. So to avoid that, the OIC member countries came up with a solution of having the centralized system. Then this model was endorsed. The model was endorsed by OIC member countries, as we said, in Turkey, and Uganda is a member in that OIC. The centralized Sharia governance system is the apex Sharia governance authority in the country. It has to be the apex Sharia governance authority in the country. For example, in Uganda, it has to be on the top, and the roles of this Sharia Advisory Council or centralized Sharia Advisory Council is trimmed down into 3 functions. Number 1, this one is very important: advise Bank of Uganda and the government on Sharia commercial matters. Advise the government, because as we have opened up the doors for Islamic banking and finance, we are going to see Uganda issuing sukuks, issuing Islamic bonds in the Middle East and other countries. So, so the centralized Sharia Advisory Council works as the advisor of government when it goes out to source for Sharia compliant funds. And already we are getting money from OIC and IDB. So we have to have the local Sharia advisors to advise our government on what is better for us. Then number 2 is approve Sharia-based products in the industry. All the products which are developed at commercial bank level, they have to be submitted to the central bank for approval. So central bank has to have that capacity of endorsing these Sharia or of approving and reviewing these Sharia-based products. Number 3, determine the Sharia ruling in the form of expert opinion. The work of the Sharia scholars in the central bank. Because now the problem we don't have Sharia courts in Uganda. And even countries like Malaysia, where there are Sharia courts, they adopted this system. Why? Because Sharia-based rulings or Sharia fatwas, or they are given, because they are given in terms of expert opinion. For Islamic financing, as we said, banking, insurance, capital markets, and etc., issues arising, these Islamic finance issues which arise from courts and before arbitrators, they are determined, they are forwarded to Central Sharia Advisory Council to determine their fate. So it is the Central Sharia Advisory Council to advise the central bank on how to advise the courts on how it will go about the Sharia rulings. Now, reasons why these Sharia rulings are referred to Central Sharia Advisory Council. Why? People can ask why. Because as we have said, even countries like Malaysia, where they have the court system, countries like Indonesia, where they have the Islamic court system, they still refer the Sharia issues, courts, the disagreements in court, or before the arbitrators, they refer them to the Central Sharia Advisory Council. Now, why do they refer them to there? Is to avoid embarrassments with Islamic banking cases as a result of incoherent and anonymous legal judgments. Given the background of our judges in Uganda, it's not a shame. They have a background, they are legal, but this is a new field. This is a new skill whereby it is normal for a new skill to refer to the experts. So for the case of Sharia, they have to be referred to Sharia Advisory Council in the Bank of Uganda. So that is a cardinal role. With Malaysian experience, despite being an Islamic state that has a fully-fledged Sharia court system, Islamic banking cases are still referred to the Central Sharia Advisory Council. For them, they call it Sharia Advisory Council of their central bank, or Bank Negara Malaysia. Sharia Advisory Council's expert opinion is taken into consideration by the court. When they give opinion, these Sharia scholars in central bank, when they give opinion, they are taken into consideration in arriving at the decisions of the court. And binding on the arbitrator if the reference is made by the arbitrator, because we have said that they advise the courts and they advise the arbitrators. So if they give the opinion to the court, it is the court to take it into consideration and arrive at the decision. Who makes the decision? It is the court that makes the decision. But to the arbitrator, when they give an opinion, that opinion is binding on the arbitrator. It has to be binding on the arbitrator to implement, because they are not at the same level. Now, in conclusion, it is, Malaysia, in conclusion, for Islamic banking implementation to over-delay with the existence of the relevant Islamic banking laws in Uganda, it is quite unfortunate. We have all the laws. Countries like, as we have said, countries like Kenya, countries like Tanzania, they don't have these laws. They don't have this legal framework that is accommodating Islamic banking, but they started. For us, we have it. So if we over-delay, it is quite unfortunate. Malaysia, the world's Islamic finance hub, requires their Sharia advisors to have either paper qualification own knowledge of Islamic jurisprudence, Islamic commercial law, and the former is not mandatory if the latter is obtained. So the problem we have in Uganda, maybe we think they are scholars, they are going to be having, they are required to be having PhDs, they are required to be having master's degrees in law, in banking, in what? In Malaysia, it is not a requirement. As long as you have the knowledge, as long as you have the knowledge, you can still benefit. You can still provide advice to central bank. As we embark on implementation with an open mind of learning and readiness to change for the better, local Sharia scholars need to be engaged and developed. We need to engage the local scholars because they know better. Local scholars understand the local environment and customs, local customs. A requirement in deliberating Sharia rulings. It is a requirement when you are giving out fatwa that you have to know the environment where the fatwa is given. A fatwa from Saudi Arabia cannot be imported in Uganda here. A fatwa from Malaysia cannot be imported or made to work in Uganda. So the same, you cannot just bring scholars from Malaysia, bring them to Uganda to give the fatwas. They have to merge, they have to work together, or they have to work alongside the local Sharia scholars because they know better the local environment and the custom. The knowledge gap in the Central Sharia Advisory Council members, if they are appointed, could be solved by establishing a strong Central Sharia Advisory Council Secretariat and also implement strong continuous professional development programs. I think this is the end of our presentation. Very sorry for the connection or the interruption.
Thank you, Doctor, for a wonderful presentation. CPA Wanyama, are you still with us? Okay. As the chair comes back, we have a few questions.
Yes.
I believe you are able to also check in the Q&A tab to see that.
Sorry, my microphone was muted, but I'm on.
Okay, Professor, you are welcome.
Yeah, thank you.
Thank you. Yeah.
So thank you for that presentation, Dr. Lujja, despite the challenges. As you see in under Q&A, there are 22 questions or comments. Maybe we can go through some of them and see which ones you can address. But before you do that, maybe you can clarify to the participants. If the banks don't charge interest on the loans, how do the banks benefit? I know there is a concept in Islamic banking about profits. Maybe you can comment on that. And also about your work at Tropical Bank. What is your work there as the Sharia expert? Maybe if you can just comment briefly on those, and then we got the Q&A.
This is a very good question. When you say if banks don't charge interest, how do they survive? We are doing business, so we're going to do business. And when we say we don't charge interest, we mean that we are going to do business, we are going to do trade. For conventional banks, what they do is they sell money. This is how can I say it? How I can say it. They sell money, they transact money. But Islamic banks don't transact money. They don't transact money. What they do is do trade. You want a house, for example? I'm not going to give you, for example, 100 million free of charge. No. I am going to go to the market, buy that house and come and I sell the house to you. So I will charge you a profit instead of interest. Profit is earned with effort. I do an effort. There is an activity I've done, economic activity that is buying and selling. Then I earn a profit. It's justifiable. It is not like interest. Interest is prohibited because money is not a commodity. Money is just a medium of exchange, especially fiat money. It's just a store of value. It is a medium of exchange. Whereas trade, the profit I earn through trade is justifiable because I go and do some work, I exert some effort, and when I earn a profit or a return, it will be justified and it will be permissible in the eyes of Sharia.
Yeah, I just wanted you to comment on that, the profit sharing arrangements, which is a part of the Islamic banking, as opposed to
no, the profit. Yes, the profit sharing arrangement, as you have said, this is where, for example, shareholders, as we said, we looked at the sources of funds. Shareholders bring their funds into a pool, and investment account holders also bring their funds into the pool, and also CASA, that is the savings and current accounts, they bring their money and they put into the pool. Now we have to agree. We agree how much, because I'm going to act as the entrepreneur. You are the financier, you have the money, but you don't have the expertise to do the business. So what we have to agree is to sit down and agree that the bank will take, for example, 40%, and the customer, the owner of the money, will take 60%. So when we go out, we do business. When we get profit, we share the profit according to the agreed profit sharing ratio. For example, 60, as we said, 60%, or 6 to 4, or 60 to 40, something like that. Then the part, when the shareholders take their portion, or the bank, when the bank takes their portion, the remaining would be shared amongst the customers according to their tenor. Tenor here, I mean, for example, how much did you put into the pool, and how long did that money stay in the pool, will determine the how can I say, will determine how much you are going to be entitled to.
Okay, continue. So as Sharia expert in tropical bank, what do you do?
Yes. What is the question?
As a Sharia expert in a tropical bank, are you involved in Islamic banking?
Are we? I didn't hear. I'm very sorry.
I mean,
involved.
Is the bank involved in Islamic banking in Uganda?
You mean, have we started Islamic banking?
Yeah, in Uganda. Tropical bank.
A tropical bank, we are still, until today, we are still waiting for license from Bank of Uganda. Bank of Uganda is supposed to set up a Central Sharia Advisory Council in order to be advised. That Central Sharia Advisory Council advises Bank of Uganda on matters of Islamic banking regulation, supervision, and approval of Islamic products, and also assisting the court system, as we have said, because the courts don't have expertise in Sharia. So until today, that Sharia Advisory Council has not been set. We are waiting until there are challenges. There are challenges on the part of the regulators in terms of legal, in terms of human capital, in terms of also resources. There are challenges, but I think government and also central bank, they are trying their level best to address these challenges. They need support. They need support, and I believe support is outside there. They can seek for support, people who can support them in terms of expertise locally. They are here, they can support them. So we are waiting until we have that Sharia Advisory Council to kick off with products.
Okay. Can you access the Q&A and go through the question?
Yes,
Q&A.
yes.
Yeah.
Yes, I can see Dennis here. How will banks having Islamic banking earn income for operational purposes since they don't charge interest? I think I answered that. I told you we are going to do trade. It does not mean that it is free. It is not free of charge. We are trading. We are going to be buying and selling. So we earn a profit. We shall not be earning interest. Interest is haram. We are going to earn a profit. When we earn a profit, we can pay expenses and costs. Then another one, how can the Islamic banking be integrated into Uganda banking system like central bank? It is already integrated. It is already integrated into our banking system because the laws, once the laws were amended, it means we have it. We have it already. We have Islamic banking in place. It is known. It is not new. It has been practiced in even other countries which are not Islamic, which are not Muslims, like UK, as I say. So it is not new. UK has done it. US has done it. Australia has done it. Canada has done it. South Africa has done it. So it is something which is known. It is not unique. Uganda knows what to do. Regulators know what to do. Just like other regulators have done it, we are going to do it the same way. Then another one, I said, can you highlight more on Islamic products? Yes, Islamic products, there are many Islamic products. We are having relatively the same products like conventional, only that we use them or we use Sharia-based contracts. For example, saving account. A saving account, I have the same saving account here in my window, in Tropical Bank Islamic window. I have the same saving account, only that I use a Sharia-based contract to justify my return. Sharia-based, I don't want to enter into technicalities of products, how they function, how they do what, we don't have time. But the issue is Islamic banking, as we said, there is a slide where I said that it has not come to dismantle the system, the existing system. What it has done, it has come to do is to approve what is right, modify what is wrong, then dismantle or disregard what is 100% wrong. So if there is room to modify, we modify. If there is room to adopt as what it is, we adopt as it is in conventional. Then another question, does Sharia law allow interest charging if the lending is to a person carrying, it is to a person carrying out business? No. Sharia does not allow all sorts of interest, simple or compound, small or big or whatever. What we accept, what we allow banks to do is just to earn or to justify that earning. Go out and do some activity and justify your earning. Then another one is, Doctor, you have made an elaborate case for Islamic banking and finance, but in a secular society like Uganda, how feasible are Islamic finance products given the cost of setting up separate systems to ensure compliance and mitigate the new risks introduced to a secular system? Yes, we have already some products. We have already some products, practical products already operational in convention, which are similar, only that we don't have time. But if we had time, I would elaborate to you and show you that purely Sharia does not, Sharia can be compatible in Ugandan legal framework, in Ugandan laws. So it is okay, they are acceptable. By the way, Sharia, even when you go to courts, as long as you have conditions you put in a contract tallying with Sharia principles, when you have agreed upon them, as long as you do not contradict the laws of the land, the civil courts or the Ugandan legal framework will accept these conditions. If I can see, with challenges in ethics and declaration within our community, who declares the business profits? What control measures are there to trace out this? Yes, we know this challenge. This is a challenge. I believe this is a challenge. This is a challenge. We know it, but you know, not all contracts will be practiced with every customer. Banks are going to be selective on with whom to partner, something like that. With whom to partner? I'm going to partner with who? Not everyone. Not everyone will have a chance to partner with the bank. Banks will only partner with only those corporate trusted clients who have books of accounts, who have auditors, for example. Don't expect that a bank, an Islamic bank, will just go out and just giving out money because I'm Islamic, you give to everyone. where I need to mitigate risk. For example, I don't partner if I'm scared of you. What I will do is just to give you a murabaha. A murabaha is similar to conventional. Similar, I've not said same. Similarity does not mean that things have to be the same. I can give you a relatively similar product like conventional where I mitigate my risk because this is shareholders' money. I don't have to lose it. So not everyone will have the chance of partnering with the bank. Then another one, if I can say, Samuel Odeke, can Sharia law allow doing business with agricultural cooperatives in Uganda, given risks in agriculture products? Yes, I can comfortably say that, in fact, this is one of the best products to be introduced. We are looking forward to introduce in Uganda because it can, this product like Salam is called Salam. It is to do with financing agriculture. It has helped Sudan too much. Countries like Indonesia, poor countries or developing countries have benefited from such a product. Even in Uganda, we have to introduce it. So it is risks. As we said, risks are inherent. We have to accept these risks. They are inherent, and you cannot do away with risks. You have, in fact, the idea of accepting risks justifies your return, justifies your benefit as a bank. Dennis, okay, does Sharia law allow interest charging? Yes, I answered that. I answered that. Then, Rashida, very sorry. Rashida Narukenge, the question says, how are provisions and impairments treated in Islamic banking? Yes, provisions, for example, the recovery system or the credit system, the way it is in conventional is going to be the same in Islamic because we have the same regulator. The credit system, because I have to mitigate my credit risks. Then if at all customers cannot pay, because I will have debt-based products like Murabaha, I give customers, they don't bring the money 30 days, 60 days, 90 days, 120. The same regulations of provisioning and impairment will take effect here in Islamic banking. According to Bank of Uganda, in fact, Bank of Uganda is looking at it in the lens of banking, not Islamic. For them, they are considering a banking. If you give out, for example, Murabaha, if you give out cost plus, you bought a house, 100 million, you sold to the customer at 120. Customer is supposed to pay in, for example, in 1 year, 2 years. First month, he skips the installment. Second month, he skips the installment. Third month, he skips the installment. So the same regulations on provisioning, those requirements would be the same. Because ideally, although in legal form it is murabaha or it is cost plus Sharia based, but in substance it is similar to a debt, like in conversion. So the regulator looks at it the same way he considers the conversion facility. Then another one, if I needed a loan of 20 million to do poultry, how can Islamic banking and finance be accessed? Which bank can one go to in Uganda? That one I answered it. I told you it's not yet. It's not yet. Banks are not yet licensed. Bank of Uganda informed us that they received 3 applications. In fact, last year I heard from the news that they offered license to 1, and then other 2 were pending, but I don't know that one or why they don't start, because we got in the news that they licensed one bank. So until today, they have not yet started operation. And the other banks, they are waiting. So maybe Bank of Uganda can clarify, but we cannot, currently we cannot assist in poultry and any other business until we have the what? Until we have the license. But maybe a product which can assist, which can render solution to my sister, is could be, there are many. We can do it in Murabaha, since it is small scale. We can buy and sell to you, or we can do Ijara, or we can do Salam, or it would depend. It will depend on the risk profile of the customer, and it will depend on the risk appetite of the bank. What happens if another one, Dennis? No. I answered that, I think. Rashida Narukenge, there is another question. Very sorry, I'm having some challenges here in accessing the questions. But if I skip some, Mr. Chairman, you can remind me some very crucial. I'm having challenges in accessing the questions here. Now, Rashida, you can see another question for Rashida. What tax is applicable to Islamic banking? E.g., conventional banking has withhold tax, WHT, on interest earned, exercise duty on all bank fees at all. What tax? I can comfortably say, my sister Rashida, as I told you, the regulators, Bank of Uganda and other regulators, taxman, the URA, they are looking at Islamic banking products with the lens of substance. That is, in substance, what are you doing? They look at it and they rate it to conventional. If in any way it is similar to conventional, they subject the same treatment they give to conventional. They give it to a relative Islamic product. So although the legal form might be different, you know, your accountants, you know, substance over form. The legal form might be different, but in substance, when they are similar, when they share something in common with conventional, so it gets the same treatment of conventional products. So mine also, or Islamic also will be the same. For example, you have said here, interest, there is withhold tax, the same. I have profit here. Now, when I earn profit, so there will be withhold tax, as you have said. Then you said exercise duty on all the fees at all, the same. Also, I have fees here. If I earn any income from any fees, so so there will be the same. There will be the same tax treatment. So the idea of government, I'm not talking on behalf of government, but because I was on a panel of tax subjecting the same treatment of tax to Islamic financial products, I know what we discussed there. The idea of the taxman, the idea of government is to create parity of treatment between Islamic and conventional banking products, and not to favor or disfavor any side, whether conventional or Islamic. Give the same treatment. Not because we don't want to favor Islamic over conventional or conventional over Islamic. So we give the same treatment. It's the same treatment. David Ocheng, to what extent are Islamic banking standards and regulations compliant to the IFRS and accounting standards? Very good question, David. Thank you. To what extent, you have said to what extent? 100% compliant. In fact, where, maybe let me first introduce to you that we have standard setting bodies for Islamic banking products or Islamic accounting. We have Islamic accounting and Sharia Audit. We have the standard setting bodies internationally recognized, like Accounting and Auditing Organization of Islamic Financial Institutions. We have IFSB, Islamic Financial Services Board, internationally recognized. So the same way, and the IOF has one of the standards they issue is accounting. In fact, they issue 5. They issue accounting, auditing, ethics, governance, and Sharia. So in accounting part, where they find that the conventional, they are tallying with, they are not compliant, they tally with Sharia principles, they just adopt the IFRS, International Financial Reporting Standards. They just adopt them. They don't reinvent the wheel. They only issue a standard where there is some unique treatment which is required in Islamic financial products. So we are not in conflict with the IFRS. We are not in conflict with the IFRS. Neither is IFRS in conflict with Sharia. We are looking at business. So where we find a need for a separate treatment or a unique treatment for Islamic, IOF will come out and issue a standard, accounting standard, which is unique to that. which speaks to that uniqueness. Then I can see another one. What laws has Microfinance Support Center used while advancing funds? This is to mean of such nature. CPA, this is CPA to mean. Saying what laws has Microfinance Support Center used while advancing funds of such nature? We need to seek guidance from Microfinance Support Center. I'm not speaking on behalf of them. They are very active on Islamic finance, Islamic banking, Islamic microfinance. They can talk. Maybe ICPAU can write to them. There are issues. There are issues which need to be addressed because the law talks of Central Sharia Advisory Council and also Sharia Advisory Boards. Maybe I've had some questions that where is the Sharia Advisory Board of Microfinance Support Center or Microfinance, Islamic Microfinance here? But I think they have some guidance from IDB because IDB, Islamic Development Banks, the Islamic Development Bank, they are funders. Maybe they are guiding them. And as we said, the institution of the Central Sharia Advisory Council, if we institute it in central bank, it can cater for all of that. Because people are questioning how compliant are this financing of Microfinance Support Center. Maybe if we have the Central Sharia Advisory Council, it will speak to that. Obed, in your opinion, what is the percentage implementation level in Uganda as of now? Is it possible to predict the time when we shall hit the ground? Very good question, Obed. Obed, if in terms of percentage, this is me as Lujja Sulaiman. I'm not talking on behalf of anybody or anyone. According to me, we are 97%. We are 97% at that. We are at that level. Only what is remaining 3%. In fact, less than that. I can consider what is remaining less than that. Less than that, because what is remaining is very, very, very small. Central bank needs to put in place on the Sharia Advisory Council. We have the Sharia Advisory Council in the law established. Central Sharia Advisory Council in the law, it is there. What is remaining today, if it decides, if it wishes to do so, it can just go out and identify scholars and start issuing licenses. So for me, as Lujja Sulaiman, not anybody, I hope we are at 97%. We have covered everything. We have covered everything. What is remaining is very small. These Sharia scholars don't need to go and read. No. As I told you, there was a slide where I told you that Malaysia, in fact, in Malaysia, they only require, sometimes they require paper qualification, and other times they require experience. And the latter, we said that the latter is not mandatory, especially when the form, especially the former is not mandatory, especially when the latter is obtained. This is what he said. As long as you have the experience, but that is at a different level. For us, we are starting, as you know, Uganda, we want everything to be 100%. We don't want to commit any mistake. We take long, and as and when we implement, we commit very big mistakes. So you cannot avoid mistakes. We have to be open to learning. If Malaysia until today is still learning, what about Uganda? So we have to accept that this is a learning curve. This is a new thing which has just come to Uganda. We have to start from somewhere, and we have to commit mistakes. And the very good thing is that these mistakes we can be assisted by, or we can benchmark from best practicing countries. Then Robert Chigundu, what are the disadvantages of Islamic banking? Of course, everything has advantages and disadvantages. What are the disadvantages of Islamic banking? The major disadvantage of Islamic banking is to do it when you are not sure. You go into it when you are not sure. You are just as if you are maybe testing. You are not sure. One leg is there and another leg is here, like Tanzania did. You see, Tanzania, 75% are Muslims, but they went into it when they are not sure. But Kenya is better than Tanzania. So when you are not sure, you will commit mistakes. When you are not sure, it's going to subject you to a huge risk when you are not sure, because you don't do what you are supposed to do. You think you are Sharia compliant, you are going to implement Sharia, you're going to implement Sharia in banking, and then it comes out to be non-Sharia compliant, non-Sharia. When I say Sharia, we don't mean full-blast Sharia, then that will be a disadvantage to the community because it will create losses for the bank. The whole income, as I said, it's not like in conversion. You know, there is operational risk here. Once the process is wrong, once the process is not Sharia compliant, the whole income is going to be rendered impermissible, and it will be channeled to the whole income. This risk is not there in conventional banking. Conventional banking, as long as you comply with the regulations of the central bank, complies with the regulations of the laws of the land, you are fit to go, you are good to go. But in Islamic, once you are not compliant, the whole income is channeled to charity. That is a great disadvantage to the bank and to the customer and to the shareholders.
I don't know what the Secretariat suggests. Can the rest of the questions be answered online? I'm sure there are more questions, and we are coming close to 4 o'clock.
Yes. Okay, sure. We can give the doctor 4 more questions, then the rest will be answered online. We will direct participants where to direct them. Thank you.
Okay, Doctor, one of the questions was asked by Simon Omiat.
Yes.
He says, Doctor, you talked about a prohibition to charge interest in Islamic banking law. May you please give a practical view to a prospective borrower who needs 200 million that is low, maybe just do business?
Can you come again?
Simon Omiat.
Yes.
He says he wants you, supposing someone wants to borrow 200 million from Islamic banking, maybe to do business, not to buy property, and the example you gave. How is this handled practically?
I've not heard. I'm very sorry. I've not heard. Can you repeat, please?
No, someone who wants to borrow 200 million shillings.
Yes, 200 million.
Now, how is this handled practically? If it is an asset, the bank can buy and sell. Supposing this is to do business, how is it? Give a practical perspective of.
But he wants billion in money terms.
Yeah, 200 million.
In money terms, yes. He wants practical cash, not asset. So
yeah,
in that regard, in that regard, if I've understood the question, there are rooms, there are products we structure where they address the needs of people, where people need, for example, personal financing, hard cash. Where they need hard cash, for example, still we can buy an asset. You know, the problem here, what we want to do, we want to avoid the act of transacting money, selling money, borrowing, lending money. Because when you lend money, you are transacting, or you are transacting in money, you are selling money, which is not acceptable in Sharia, which is not acceptable in Islam. So what we do, we buy a commodity, an asset. When we buy that asset, we sell that asset to you. When we sell that asset to you, you own it, and you remain with the obligation to pay in the future. For example, you obtain the 1 billion you want. Now, when you get the 1 billion, you can do anything you want. Now, after you have borrowed, after you have obtained the 1 billion, you have the obligation. Now you have the asset. You are not yet. You have not yet obtained the 1 billion. You have the asset, not money. We can assist, or we can sell. We can act as your agent to sell that commodity in another market, in a market, or in another market to obtain cash. We bought asset. We sold the asset to you. You obtained the asset. We sold the asset on your behalf into the market. For example, where we can, for example, it can be a platform where you cannot participate. You are not a participant. You as an individual customer, it is me, the bank, who can access that market. So I said it there on your behalf. I obtain cash, then I credit your account. You have obtained the cash. So the issue is here, we want to avoid what Sharia scholars do, or what Islamic banking has come to do, is to eliminate interest. It will do all, it will come up with all ideas of eliminating eliminating the what? Eliminating the interest. For example, if it needs buying and selling again in another market, I will do it in order to avoid that activity or that interest which is not permissible in Islam or in Sharia.
Okay, thank you for the answer. Now, there is another question. Explain on musharaka, mudaraha, and contracts.
Yes, sir. I think these ones will take time. This one, because you go into practical how they are doing it. I don't know how long you can give it. I don't know whether you can accommodate my answer. But if I go musharaka, mudaraba, that is a full product.
Is there any brief?
Okay.
Is there any very brief answer?
Okay, maybe a brief one. Musharaka, that is when I go partnership. I go the bank partners with the customer. If you're corporate, as I said, if, for example, you have auditors, you have an accountant, you have books of account, the bank can come and partner with you. That is what we call musharaka or partnership. In fact, it is called active partnership, where both of us contribute in money terms. But mudaraba, the difference is, it is also partnership, but one partner contributes effort, not money. One partner contributes money, finance, another partner contributes expertise or effort, not money. So that is the difference between the two, but both of them are musharaka. Both of them are partnerships. The first one is active, where both contribute in terms of funds. Then the second one, one of them contributes effort. They sit down, they agree on the profit sharing ratio. When time for profit comes, they share profit according to the pre-agreed profit sharing ratio between the two in both contracts. But when there is loss, if there is any loss, in case of any loss, the difference between these two contracts is that in musharaka, the first one, the active partnership, that loss will be shared by both parties according to their contribution in the capital of the undertaking. But in mudaraba, if there is loss in mudaraba, the second one, passive partnership, if there is loss, that loss is suffered by only the financier, the one who contributed money. The other party who contributed the effort will suffer only fruitless effort. He will not suffer. He will not suffer losses in monetary terms, because Sharia is very fair. It cannot make you lose what you did not contribute.
How about ijara? Okay, well, got that. What about ijara?
Now, ijara is basically meaning leasing. Leasing, as you see, leasing in conventional leasing, hire purchase. It is the same as ijara here. It depends. Hire purchase or leasing, where I buy the commodity, then I come, I lease that commodity to you. You be paying me rentals, not interest, but you pay me rentals. That is the meaning.
Okay, thank you. Perhaps if you'd like to select one of the questions, just one, and we end there. If there is any you think you need to address. If not, we can end here.
Okay, let me select this one. Isma Mambo. I am CPA Isma Mambo. My concern is about attendance of this webinar. We always pay. No, that is yours, maybe. It is not mine. But you should do.
Okay.
No.
However, you can give answers later and they can be put on the website if there are other questions. Okay, I would like to hand over to the Secretariat. I thank the presenter for that elaborate presentation. I'm sure we have learned a lot from your presentation, things we're not aware of. We thank you for enlightening us. Now the Secretariat.
Yeah, thank you so much, Professor, for a wonderful session, chairing the webinar this afternoon, Islamic Banking and Finance. We thank you for that moderation, guiding the presenter and the participants. We in a special way, thank Dr. Lujja Sulaiman for a wonderful presentation. We thank you so much, this being our first Islamic Banking and Finance webinar, and we hope to have more other webinars. We will continue to engage in such forums. We thank you for a wonderful presentation, for the useful insights regarding the Islamic Banking and Finance. To our participants, we thank you so much. We are very grateful. We thank you for embracing the new normal, and we are in particular very sorry for the internet challenges. We hope we have learned one or two, so that next time we minimize that risk of internet disruption. But we are very grateful for your participation. We started when we were 130, and now we are still around that figure. That shows how interesting the topic was. And we believe also our objectives in inviting you and setting the webinar and inviting the presenter and carefully selecting the topic to discuss on, our objectives have been achieved. So while submitting your CPD return, we expect positive results. You plan to attend the event to satisfy certain need, and I believe that need has been really satisfied. We will share certificates and presentations in your emails, which you gave us at registration. While registering for this webinar, we will share those items in your email. If you are a member and you gave us your ID number, you will also be able to find your CPD certificate on your member account. You will be able to find it there. Otherwise, we thank you. On Friday, there is a very important webinar just like this, customs management. Please plan to attend it. It is very insightful. And because of this being a new normal, everything is new. So we would like us all to be in attendance and listen and get up to date with our knowledge. Otherwise, on behalf of ICPAU and on particularly the behalf of the CPD team here with me at ICPAU, we thank you so much for attending and wish you all the blessings God would want to give you. Otherwise, bye for now.